Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, New York coffee. In the recent past, this market had been subject to two separate head and shoulders patterns. The first was a small December 25 to January 26 head and shoulders top, but dark blue neckline extension, currently at 285.20. The other was a more recent February to March reverse head and shoulders pattern with a bright pink neckline extension, currently at 279.25. Last week, prices broke up through the neckline extensions for both of these patterns, rallying up through the 50% Fibonacci lines of the Jan 23 to February 25 move at 286.10, the May 24 to February 25 move at 310.80, and through the flatlining gold long moving average, currently 319.05. and approaching the 50% Fibonacci line of the November 24 to February 25 move at 334.80, and in the process forming a monthly key reversal up. We also saw a separate new pattern being built, a pattern that has helped the rise in prices, a mid-May to end June small reverse head and shoulders pattern and bottom with a highlighted bright green neckline, currently 283.05, which ties in with the bright pink and dark blue necklines as well as the nearby 50% Fibonacci lines. I spoke about this pattern last week when I said, and I quote, "The latest reverse head and shoulders pattern has not been triggered as yet, but it is usually seen as a bullish pattern, though bearish continuation patterns do exist, so caution, but be aware of the possibility of further attempts higher." End of quote. Since then, prices have moved above the bright green neckline, triggering the pattern with a primary target at 305.55 and a secondary target at 315.40. As you can see, both of these targets have already been reached. Additionally, the whole start of February today action is now a bump and run reversal bottom, the market in the run phase, and prices are already reaching most, if not all, the topside targets. Just the, that one's even gone as well. I had, when I was looking at this, the late January high at 351.60. But the market's gone straight through that. There is something else I'd once again like to look at here. For this, I'm indebted to Ray Bradbury for asking me about New York coffee 65 weeks ago. And I went at the time to my longer term charts, the monthly charts, where we can see some interesting insights. You see on my monthly longer term charts, I noticed back then a pattern that had not been immediately obvious to me at the start of 2025. It was a multi-year 2012 to 2024 very large reverse head and shoulders bottom, a bright red neckline on my chart, currently at 279.55. The break higher over this neckline reached its primary target on the upside and just about reached its harder to achieve secondary target. Then the market turned lower, and over the course of 2025 and now into 2026 has formed a very, very, very large double top pattern. An Adam and Adam double top based on that bright red neckline. Now the market had breached and broken below this bright red neckline. I felt obliged 4 weeks ago to lay out some targets below for this really, really, really long-term pattern. As the primary target X would be down in the 184.90 zone amongst the congestion of 2023 and early 2024, and the 2020 to date uptrend currently at 185.80, with a secondary harder to reach, much harder to reach, target X1 down in the 132 even zone, on top of the congestion from late last decade and the start of the 2020s, plus the shallower 2019 to date uptrend currently 132.40. Now, I've always said, please bear this in mind, these are longer term, possibly very long term targets below for this double top pattern, and that would be fine normally, except we have last month moved up significantly, back up over the bright red long-term neckline with something significant I've warned about, a monthly key reversal up. We already carried on higher in July, and that now puts at threat both target X and target X1 below, and if it stays anything like this, I will be retiring for the moment. More and more likely, though, I will wait until the close off of July to fully comment. But it looks like the move lower below the bright red neckline might be a false break lower. London coffee. 56 weeks ago, I said of the, a year ago, 56 weeks ago, I said of the bearish pressure on this market, and I quote, they now have the overhang of the market from roughly 5,300 up to this year's high at 58.49, sitting above, end of quote. Now, this overhang of bearish pressure and ammunition was important as it started back then to press down, magnifying the subsequent breaks lower. The main overhead resistance since then had been the dark blue February 25 to date downtrend, currently at 36.03. It's been tested over the last 3 weeks and seemed to hold down prices, but last week it gave way. This downtrend had enough of an impact with me back then that I drew a parallel bright red bear channel based around it, currently at 28.52 to 37.89. Last week this bear channel was ruptured, breached on the upside but not broken. However, today it looks like we will have the first full close over it, as well as the first close over the declining gold long moving average, currently at 38.55 for some time. All in all, a seismic event, and one that not only requires target X1 down at 30.04 below, but it lays out some new potential targets topside. I know this is quite quick going, given my usual conservative nature, but right now I'm confident enough in a high close, especially after last month's monthly key reversal up. I feel confident enough, even obliged, to lay out some targets topside for the break higher from the bear channel and cracking wide open that bear channel. Thus, a primary target X will be up in the 45.29 area, but secondary hard to reach target X2 up in the 47.26 area. Looking above, we have limited resistances up up to the 41.68 to 41.87 area. We really only start hitting some significant resistances over the April 24 high at 43.38 and the June 24 high at 43.95. And even then, those do not appear to be that great. However, I would just remind you of my statement at the beginning of this commentary when I said, and I quote, they now have the overhang of the market from roughly 5,300 up to this year's high at 58.49, sitting above. And that's the end of that quote. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.